The story of investment banking in India begins not with Indian banks but with foreign ones. European banks like Chartered Bank and Grindlays dominated India's early capital markets in the 19th century. Their main business was trade finance, facilitating exports of cotton, tea and spices to the British Empire. They issued letters of credit, managed foreign exchange, and enabled large-scale commerce. These banks created the first channels for capital movement in India. Their focus was narrow, but their impact was profound. They introduced modern banking practices and financial instruments. For decades, domestic institutions played almost no role in large-scale corporate finance. The expertise and capital all resided with these foreign entities. While they served colonial interests, they also laid the groundwork for India's future financial ecosystem. The systems and culture they established slowly built up India's financial acumen. This long apprenticeship set the stage for India to eventually shape its own financial destiny. The seeds of Indian investment banking were sown by these early foreign pioneers. After independence, India's financial landscape shifted dramatically. Foreign banks lost influence as public sector banks took center stage. Investment banking, or merchant banking, was dormant until the 1970s. The State Bank of India launched its merchant banking division in 1972, a groundbreaking move. Soon after, ICICI followed with its own division. These divisions helped Indian companies raise capital and navigate regulatory hurdles. Their work was methodical and bureaucratic, but revolutionary for the time. For the first time, Indian companies had domestic financial advisors. This period built the institutional foundation for investment banking in India. A new pool of professionals emerged, understanding the unique challenges of the Indian market. Though the ecosystem was still young, these public sector pioneers planted the seeds for a coming financial revolution. The groundwork was laid for the explosive growth that would follow economic reforms. The 1990s changed everything for Indian investment banking. Economic liberalization in 1991 opened the economy to private and foreign investment. Suddenly, companies needed massive funding to expand and compete globally. The demand for investment banking services exploded. SEBI, established in 1992, brought order and transparency to the capital markets. Stringent regulations and disclosure norms built investor confidence. Investment bankers now had to be registered and accountable. Private Indian banks like HDFC and Axis, boutique firms and global giants like Morgan Stanley and Goldman Sachs rushed in. IPOs skyrocketed and family businesses became public companies. Investment bankers became star dealmakers, driving India's economic transformation. The 1990s saw investment banking evolve from a niche service to a dynamic, high-profile industry. This was the decade Indian investment banking truly came of age. The stage was set for a new era of growth and competition. As India entered the 21st century, investment banking matured rapidly. The chaotic 1990s gave way to a more structured, sophisticated market. The Association of Investment Bankers of India, AIBI, emerged as the industry's unified voice. AIBI worked with SEBI and policymakers to refine regulations and set best practices. This collaboration standardized industry practices and boosted professionalism. Investment banks expanded beyond IPOs into M&A, private equity, and structured finance. They became comprehensive financial advisors, integral to corporate strategy. Competition intensified, with clear leaders emerging in the market. The rise of startups after 2010 created new opportunities for investment bankers. They guided unicorns to public listings, becoming kingmakers of the new economy. The industry had fully matured, driving India's corporate growth story. From trade finance to strategic advisory, Indian investment banking had transformed. Today, India's investment banking landscape is a battleground of titans. Homegrown champions and global giants compete for a share of this booming market. SBI Capital Markets leads in public sector divestments and infrastructure deals. ICICI Securities has evolved into a top-tier, fully integrated investment bank. Axis Capital is known for its agility and client-centric approach. Foreign banks like Barclays, JP Morgan, and Morgan Stanley bring global expertise and capital. Morgan Stanley, an early foreign entrant, remains a top player, renowned for research and international investor access. These institutions have shaped India's financial evolution. Every unicorn IPO is a testament to this journey. From colonial trade financiers to modern dealmakers, the transformation is remarkable. If you were to launch a company today, which of these giants would you trust to take you public?